Hey everyone, welcome back to MSTY. In this episode, we're going to be talking a little bit more about MicroStrategy. We're going to be talking about the investment strategies that you can participate in using the MicroStrategy investment products. Now, this is in response to seeing a lot of people discuss MSTY as this fantastic solve-all solution to investing on irresponsibly long MicroStrategy, and I really wanted to spend some time to clarify why I don't think MSTY is necessarily the best products to own to balance out income and capital gain. And I'm going to tell you guys why in this episode. So if you're new to the channel, this channel is about investing in 5 buckets: Bitcoin self-custody, Bitcoin standard dividend investing, Bitcoin ETFs, MicroStrategy, and Bitcoin treasury companies, which is what the sort of the box that we're going to be talking about today. And then obviously we do some Bitcoin trading as well. So we're going to talk about box 4 today. So as a bit of an introduction, we are all familiar with the MicroStrategy common stock. It has a low preference in the event of a liquidation, no dividend, and is a direct leverage exposure to custodied Bitcoin. MSTY is a derivative ETF product. It utilizes what is called a covered call strategy. It owns MicroStrategy shares and issues call options on those MicroStrategy shares that it's owned to collect an option premium. This option premium represents the risk of the call option being called by the counterparty who purchased the call option, which means that the MicroStrategy shares get sold at a predetermined price, which if they're being exercised is lower than the current market price. It has a very, very high dividend yield, but I don't get distracted by the headline dividend yield, and I'm going to talk about that a little bit more why. STRK is a preference share with a convertible option on MicroStrategy shares. It had a higher preference in the event of liquidation, and it has an 8% dividend yield on its issued face value. STRF is a standard preference share. It has a higher preference in the event of liquidation over your common stock. It has a 10% dividend on the face value. I don't think it was $100 US, but I'll have to check that. And I'm going to argue why MSTR and STRK are the best products to own for balancing income and capital growth. MSTY is not all it seems. The dividend yield is an impressive 250% at the moment, which is amazing, and on the surface that seems great. And recently it has done well, but be careful when looking at MSTY, and the reason why is here is the MSTY price when compared to MicroStrategy, and you can see MicroStrategy has gone up massively, come down, relaxed a little bit, and we've got the MSTY price here, which is obviously a lot more stable because we're selling that upside. There's some really interesting attributes about MSTY that I'm going to point out now and will become very obvious when we look at other examples. So here, during April to September last year, prior to the big run up in the MicroStrategy price, you can see MicroStrategy sort of chopping along at this price. And while it was doing that, MSTY was in capital decline. You can see that for the whole time it was in capital decline. And it only rose up a little bit to capture some of the upside that MicroStrategy has. And the reason it's only capturing some of it is because it's selling call options, and those call options are being exercised, and the upside is being sold off to other parties in exchange for income. And you can see here when we had this little chop here, again, capital decline. Now, in normal markets, if you do not have massively aggressive increases in price, these covered call options actually decline in value, and that is because over time the call options are being sold and then they're being called and the capital gets eaten down. And I'm going to show you an example here. So this is QQQY, which is the exact same covered call strategy as MSTY, and you can see over time, over the last 18 months or so, 2 years, that it has been in perpetual capital decline, and it's gone, I think it was issued around $60 a share, and now it is at sort of like $20 a share or something like that. And the reason for that is that each month it sells its covered calls, collects a premium, pays it out, and then declines in value. Now, whenever the market is not absolutely and utterly outperforming what the market is expected to do, there's no capital appreciation. And a lot of the income that you're generating is actually the capital value of your shares being converted into income, and that's really inefficient because if you do that, you pay tax on that income. So you'll say, oh, I'm at a capital loss, but then I'll generate income, and that becomes income tax, it gets taxed at income rates, so it becomes very inefficient. And so if you're not having these massive run-ups in prices, you get this, which is what occurs during a steady rising QQQ. QQQ is the NASDAQ, right, which is generally sort of rising, with the exception of sort of this period here where it's had a really rough time. But you don't really want to own these because of this. And if you look at it, the QQQY return declines from 80% to 16% when you factor in this capital decline plus the income that you make, which is, it's not a bad dividend yield, but it's also nowhere near that sort of top line 80%. I'm going to make 80% dividend yield all the time. And so the thing is as soon as we hit a bear market, which we will probably sometime in 2026, maybe late 2025, these products are going to absolutely get demolished on a capital value basis because they're going to be completely exposed to the downside and have little upside. And then not only that, the dividend yield gets calculated on its base price. And so the dividend yield is actually declining on the capital base. And so the dividend yield is declining as well. These products decay into zero over time. Generally. So they're not that great of investment. STRK, however, solves the income versus capital appreciation problem. It's an 8% dividend per share. It's a cumulative preferential dividend. It must be paid. If they fail to pay it, it gets added it remains owed and needs to be added before they pay any other dividends. This dividend does not increase to account for inflation. It's purely nominal. It's fixed in like a USD price terms. It's $8 on the $100 face value. Convertible to but we have this convertible to MSTR at 10-to-1 ratio, which means that the STRK is exposed to the capital appreciation of MicroStrategy over the long run. And after $1,000 a share, will basically track the MicroStrategy price. And so what you're doing is you're delaying some of that capital appreciation in exchange for a capital return. Now, right now, STRK is yielding like 9% because it's trading at like $90 a share. And so this window of favorable yield will close as MSTR sustainably hits $1,000 a share, right? So as it goes up, the yield will get compressed and it'll be not really worth buying, except it'll be kind of like a MSTR following share with this like tiny kind of dividend component that no one's really that fussed about. It'll be like 1% or 0.5% as it goes to like $2,000, $3,000 a share. And you'll have this tiny little dividend thing. You're like, I don't really care about it, So there's this favorable window right now to collect STRK at 9% yield, which as it appreciates, you will maintain that sort of same level of income, which, may help with your retirement or supplement your income in some way. But you'll also be exposed to that capital appreciation of MicroStrategy. And that is why I find it to be a much more superior product to MSTY. STRF, on the other hand, is just a dividend, 10% dividend per share. It's not a convertible option. It's just a bet that MicroStrategy can maintain liquidity through the cash flow from operations or managing their treasury, right? Which may include selling down Bitcoin if they need to. It's actually somewhat of like a short position on Bitcoin. It's sort of like, hey, I don't really believe in what MicroStrategy is really doing. I just want my 10% yield. So it's fun, and the problem is it's fundamentally a nominal product, which means that it's like kind of fixed in dollar terms. It'll give a 10% yield, and as time goes by, that'll become less and less appealing on a dollar basis because inflation is going to make that comparatively less interesting. And so it's not really as powerful of a product, and that's why STRK is the one that I prefer, and obviously owning MicroStrategy as well. And finally, this is a disclaimer: nothing I provide on this channel is legal, tax, or financial advice of any kind. You must do your own research and you change your make your own responsibility. This is entertainment only. You are listening to a random magazine on the internet. I hope you enjoyed the episode. Thanks for you guys. Bye.